We have a lot to talk about in terms of the direction of food stocks, how people are snacking in this country, but I don't want your news today with Walmart to get lost in that shuffle. Exactly did you announce and how important is it to your company?
Yeah, absolutely. We announced a great partnership with Walmart and Sam's Club today to advance 600,000 acres of farmland to regenerative practices by 2030. And it's a really, really big deal because regenerative agriculture makes a huge difference in terms of greenhouse gas emissions, making sure that we do our part to make a difference for our earth and our environment. At the same time, soil health as well as crop resiliency is much stronger with regenerative agricultural practices. And it's really going back to farming the way it used to be done with cover crops and crop rotation, having livestock on the land as well. And it makes a significant difference. So partnering with Walmart, that 600,000 acres is the equivalent of all the ingredients we use to supply Walmart and Sam's Club over the period of time. So we're excited about this. Walmart's a great partner. We're excited to make a difference for our planet and for the people on it.
From an investor watching this and trying to understand this, good for the planet, Good news. But what does it do for the operating fundamentals of your business longer term?
Well, without ingredients and without crops, we can't make our products. So for us, it's fundamental in terms of our business model. So we think it's the right thing to do for the planet, but it's also the right thing to ensure that we have wheat and oats and the things that we make great tasting cereals and baked goods out of for years to come.
How serious are climate change talks in the C-suite in General Mills?
They're incredibly serious. I mean, going all the way to our board, we've implemented what we call the Global Impact Governance Committee over the last few years. Reports to the CEO, we report to the board every single board meeting in terms of the commitments we've made from an environmental standpoint. We've made 10 commitments across various vectors, and we report on the glide path and what we have to do to achieve those commitments over the long term. So it's very important to us as a company.
Does your company and the peers in your industry see climate change as a major disruptive event for the next decade for the food industry?
I mean, I don't think you have to look to the future. You can look to now. And if you look at drought and other things that we've seen over the last few years, we're one of the biggest buyers of oats in the world. And we had a drought in Canada several years ago, which put a huge, an issue from a supply chain standpoint in front of us that we had to deal with. So it's real today. It's something that we are focused on. We think we can make a difference for the short and long term.
All right, let's zero in on the portfolio that you see, snacks and cereal. What does demand look like for your products?
Yeah, it's been a really interesting demand environment. If you go back to the beginning of the pandemic, we've seen some of the most significant both demand and supply disruptions in a generation, and all the policy implications that came along with that. So the government increased SNAP benefits, and those benefits have now gone away. So we've seen a lot of different moving pieces. More recently, we've seen consumers go back to full mobility, so back to the way that they were traveling and getting out prior to the pandemic. I think this past summer, TSA numbers would say they're actually above pre-pandemic levels. So when consumers were at home more, that was good for our businesses. They're back out at restaurants and moving around. Obviously, that's a bit more challenging. At the same time, the economy is a little bit more challenging today. So as a result, when we see that, we see value-seeking behaviors, and some of that is, shopping different channels. Some of it is moving down into private label and products like that. But ultimately, it also moves people from restaurants back to in-home. So there's been a lot of moving pieces. And as a result, we're kind of in the long tail of all these disruptions working their way through. So volume's been a little bit softer the last few months, really for the entire food and beverage industry. As we exit this calendar year and get into the next one, we expect back to a more normal environment.
It's strange, John, because we got recently a very strong jobs report. We continue to get some good reads on the economy, but bottom line is, are people just going hungry? Does that economic data not reflect the realities you're seeing in your business where that family of four just can't afford to buy a box of cereal?
There are no doubt that there are plenty of families that are challenged right now and are seeking these exhibiting these value-seeking behaviors. Again, we see that play out across multiple vectors, and that's something that we address for sure. At the same time, we do believe that there's some pantry destocking that's going on. If you think about during COVID, a lot of people filled up their pantries, they filled up their freezers, and they're working their way down. Also, food waste. I think the fact is that almost a third of all food is ultimately thrown away. Consumers become a little bit more efficient and economical by watching their waste as well. So we think consumers are paying attention to their pocketbook, and as a result, are exhibiting some of these behaviors that are making it a little bit challenging from a demand environment. But at the same time, we understand how consumers are hurting and why they're doing these things.
Staying on the thread, John, of things being weird. Normally, when the world gets volatile, like we're seeing now, you know this, they go and they pick up shares of General Mills, shares of PepsiCo, Conagra Brands, consumer staples. They're known for cash flow dividend yields, you name it. But there's been a lot of focus on weight loss drugs and how that is going to impact demand for the snacks and cereals you sell. I'll put this question to you. I put it to PepsiCo last week. I put it to Conagra. Are you seeing consumers pull back because they're pumping themselves with these drugs?
Yeah, we would say it's a great philosophical debate. And if you're looking 3 or 5 years down the road, there could be an impact from these weight loss drugs. We'll monitor these drugs just like we monitor all food trends. Weight management is nothing new in the food space. If you go back to the Atkins phase, arguably that was a bigger impact on our business.
I tried that
we
when
saw
I was
a lot
a teen.
of carbs.
I can't believe I just said that on live TV, but it worked for me. A lot of bacon. I lost some weight.
And it wasn't so good for the cereal category at the time, but we adapted and we overcame that. So we'll pay attention to it for sure. What I can tell you is just by the sheer numbers today, it is not having an impact on the food and beverage business because there's not enough people are using it. It's expensive. Insurance doesn't cover it in most cases. And there's a lot to learn. I mean, I saw a fact recently that a third of all consumers that tried it didn't make it even a year on the drug. So we'll see. We're taking it very seriously. We're studying the long-term impacts, and we'll adjust. We can introduce smaller packaging sizes. We can.
Well, that's the one. How do you adjust?
Yeah.
We've heard some players in packaged food think about re-engineering ingredients. You shrink the packages. I mean, people are going to use these drugs over the next 5 years. So how do you prepare your company?
So again, we'll be modeling out various impacts and try to project what we think will happen here. But smaller pack sizes for consumers that are consuming fewer quantities makes sense. But also we shift our product portfolio so we can move to more nutrient, products that have more of the nutrients that people are looking for while on this diet. And we'll continue to do that. We've been around for 155 years. We've seen a lot of trends through the years. Weight management is evergreen. And whether it's GLP-1s or Atkins or keto, we're going to see something come along and we innovate. So we're a great industry when it comes to innovation. We've remained relevant through all these years, and I'm convinced we'll do that as we move forward, even with GLP-1s for sure as well.
Good to see you in person for a change, John. Last time I talked to you, I think I was talking to you from my ex-girlfriend's kitchen during the pandemic, 2020.
I was in my kitchen as well. So
I had my full pantry stocked, so I'm destocking.
I love it.
John Nudi, good to see you. General Mills, thanks so much. Please do come back.
Thank you.